Hello, and welcome to Connected with Latham, where we discuss ideas, legal developments, and the business trends shaping the global economy. I'm Haim Zaltzman, partner and global vice chair of Latham & Watkins Emerging Companies and Growth Practice. In this episode, I'm joined by Ben Forman, founder and managing partner, and Adrian Uberto, partner and CEO of ParaFi Capital, an alternative asset management and technology firm focused on blockchain and digital assets. Founded in 2018, ParaFi was among the earliest institutional investors in the blockchain industry and has evolved into a trusted partner by leading institutions globally. Adrian, Ben, thank you for being here.
Well, thanks for having us, Haim.
Thanks a lot, Haim. Great to be here.
They're definitely trusted by me, as I've had the privilege of working with Ben and Adrian for years. I think I actually met Ben through an introduction from another client in 2018, right after ParaFi was getting launched initially, and took a stroll in San Francisco with Ben as our first foray into our relationship, and then started slowly and surely working with ParaFi the years then. But less importantly about me and our initial start with ParaFi, ParaFi is one of the most prominent investors in the blockchain and digital assets world, with investments including Animoca, Polymarket, and basically every Bitcoin treasury and other play that has made the news in the last few years. Before we dive deeply into ParaFi, I want the audience to know both of you, Ben and Adrian, your backgrounds, your journeys, and what makes you guys exceptional. So Ben, I'll start with you. First of all, before I do start, I really appreciate you guys jumping on for this podcast. It's always a pleasure to do anything with you guys, work or personal, getting drinks. So having you guys do this podcast with me is extra cool. Ben, tell me why you're so passionate about blockchain and fintech. And particularly, I would love the audience to hear how your background has shaped your views on driving ParaFi's continued growth and innovation from the very start.
Yeah, so one, great to be here, Haim. It's a pleasure. So quick background on myself. So I cut my teeth as an investor in traditional asset classes, 10 years at KKR, TPG, working across private equity, private credit, investing across the capital structure. And I've always loved financial markets, genuinely just viewed them as puzzles. And I like puzzles, I like games. And, financial markets are competitive, they are complex, and to me, they're just a lot of fun, and I've just always gravitated towards them. And in my 10 years at KKR TPG, I had the opportunity to learn a lot of new asset classes. I started in, investment banking, moved to private equity, then moved to private credit, then did liquid credit, touched distressed debt. And as part of the journey of learning new asset classes, I was lucky enough to stumble across Bitcoin in 2015. My roommate at the time was an engineer at Google, and he kept on mentioning Bitcoin to me. Curiosity took flight, and I ended up just kind of delving deep into what Bitcoin is, what money is, would have lunch at the Coinbase cafeteria when it was an early stage company. And that kind of just thrust me into the ecosystem of crypto, which back 10 plus years ago was candidly just a whole lot smaller than it is today. It didn't even feel like an industry or an asset class. It just felt very much like a little cottage kind of technology, an area of the economy that was very niche and not really, relevant to most people. So what kind of started as my nights and weekends hobby just continued to kind of snowball and evolve alongside the industry. And, people remember in, 2015, there was a lot of activity around enterprise blockchain. In 2016, the earliest projects on Ethereum began to launch. In 2017, there was the ICO boom, and crypto kind of started to go through this bull market. And I got to a kind of certain point in my time at KKR where, candidly, I was just so interested in this new technology, this new asset class. And because it's just a brand new part of the economy, a brand new part of financial markets, it just made sense to start a new investment firm to capitalize on it. No firm in the space at the time was really taking an institutional approach to investing in this space. They were just generally kind of like a couple people in their garage in front of laptops, or there were some venture capital firms that were, deploying, but no one was like really kind of ushering institutional capital into the space. And so I thought there was an opportunity to really like take the KKR approach to asset management, everything from culture to decision making to risk management, and apply it to this brand new asset class. So I ultimately decided to take the leap. This was in early 2018. So we're effectively kind of 8 years into the journey. It felt like dog years, candidly. Like we joke, kind of crypto moves in dog years. Like it feels like a lot longer than 8 years, but it's been really like the journey of a lifetime. And I feel very fortunate and just grateful to like be able to be in this asset class, and which I consider just incredibly exciting, dynamic, disruptive, and also grateful just to be part of a great team and work with great people like Adrian, and then also yourself. So maybe didn't answer all your questions.
No, well, you actually did, and we'll get to the which dog year we're in right now a little bit later. But it's a great segue, not because of the dog, but because you mentioned Adrian, to get a little bit of background on him. Just for everybody, Adrian is a huge Dodgers fan, and I am not. So, it's not a bad segue when somebody says dog and Dodger. I think of the same thing. I know. Give me a hard time, Adrian. So Adrian, a great segue. What has brought you to ParaFi? I would love to hear your background, how it fits within the ParaFi framework and what you guys are doing generally and specifically. So, yeah, would love to hear how you ended up at ParaFi and how your background really shapes the way you look at, just like Ben's very, the KKR approach. Do you have anything similar from your background in how you look at what ParaFi is doing and how you guys are taking it forward?
So I think you're going to see a lot of similarities. What brought me to ParaFi was really Ben, right? What Ben was building, what he was looking to kind of build a ParaFi in terms of, at the time, really having really a lot of institutional firms out there and taking that approach. I'll probably substitute the KKR with Blackstone, but maybe putting it in context from my background, started my career at Lehman Brothers, which was a fascinating place to start because it was focused on the wind down and restructuring across one of the largest, most complex bankruptcies, and really having and turn your teeth on understanding the complexity of a global firm and how to wind it down. And the restructuring plans was a really interesting way to kind of start someone's career. From there, went to Blackstone because, Lehman Brothers was not going to be going to forever or gone forever. And at Blackstone, that's where I joined the multi-asset management team, which essentially is the team that deploys into investment managers. They've expanded their mandate, since I was there, but essentially had real hands-on experience of first underwriting and understanding asset managers, hedge fund managers across every type of strategy, across every part of the world. And Blackstone did a very unique way of not just understanding the risk, but also building with these managers, whether it's seeding, launching, creating specific products. It really forced you to understand what it truly meant to operate, underwrite, and launch a hedge fund as close as you can get as being an allocator. Similar to Ben, in some ways, at that time, my interest was really focused on where I saw the world going, whether it was more of an engineering element in the investment side or tech or venture. And digital assets were just kind of really coming on the radar for myself. But I knew I wanted to be an operator. So that transition from allocator to operator was very important to me. And I made the hard decision, which at the time was probably the worst decision of my life. But looking backwards, a very good decision to leave Blackstone and really start a small investment fund that was focused on digital asset investing at the time. And, during that time, this was the early days where there was no real set agreement on how you even invest into digital assets, whether it was the first version of a SAFT that a law firm out their own name put together, which turned out to be not the best approach, but was really, we needed to figure something out. How do we get capital into those assets? That was all before ParaFi. Kind of bringing it back to where I started was I knew we could build, and there could be a firm out there that really took that Blackstone approach, or just, Ben takes the KKR approach to really taking not just institutional and the buzzword of institution, but really being thoughtful and purposeful in terms of building a firm that was long-term focused. Yes, there are new things in this asset class. There are barely any agreements that you knew, covered how to capture value in your investment, and everyone was figuring it out together. But what I was focused on was how can we build a firm that can navigate this, evolve with this space. And I think over the past 8 years, that's still what we're doing today. But over the past 8 years, we've seen this industry really evolve, and be part of the ParaFi team, particularly my role, has been exactly kind of the decision I made all those years ago to really go to the operator side, but really hands-on build our version of a firm that can navigate and evolve with the industry.
Yeah, I mean, for the audience, because I do love to distill, to take these moments, take a breath, and what a quick takeaways. I mean, my takeaways from both Ben and Adrian and your backgrounds and pushing ParaFi forward is that you're both builders. You got to be builder, like from the start, in crypto blockchain. That's the core. You got to want something new. You got to be constantly looking at that. And then the real important thing, which is something that's also important, you build, but your backgrounds are really important. And, if I may, both of you guys are total finance nerds. For the KKR and the Blackstone approach, that's a definition of nerding out. And by the way, that's not a negative. It's a huge positive to have that pedigree, that education, that framework to take forward, including an area of building. And that, by the way, leads me to one of my favorite questions on this is I'm going to ask each one of you, and I don't want you guys to cop out and take the easy route into who is the biggest nerd at ParaFi?
I can maybe take that question first. So one of the things we do at ParaFi offsites is we often play board games, and things get very competitive. And one of our favorite board games is this game called Blockus. It's spelled Blokus. Anyone listening, I highly recommend buying it.
Blockus? About it.
Yes, exactly. It's a 4-person game. It involves placing tiles on a grid. And, the object of the game is basically to place all your tiles on a grid and have as few kind of remaining tiles left when no one can play any incremental piece. It'll make sense if you open up the board and look at it. But it's a really fascinating game. But long story short, I was kind of the dominant person at ParaFi at Blockus for many years. But recently, one of our engineers at an offsite just demolished me. His name's Corlin. And he confided in me that after losing to me at the prior offsite, he just went very, very deep in Blockus on the blogs, playing online, and he actually became top 20 in the world at Blockus at this board game just to beat me. So he's definitely the biggest. If Cortland's listening, I also use the term nerd in the most endearing way.
That's awesome. Adrian, do you agree? You got something?
I mean, I would say anytime a group of talented people and that they go deep, that's a perfect example. My example, or what I was thinking of while Ben was talking before you mentioned Corlin, was actually going to land on Corlin as well. So I probably shouldn't go down that route. I was going to talk about our trivia night. But no, I think overall, I think anytime you have a group like we do at ParaFi, you can see how deep people go. I mean, a lot of things with the our kind of first principle. So you have people here who, no matter what it is that they're passionate about, they nerd out on it. And then I guess more in the traditional sense of nerdy now, there are a few names that we use at ParaFi for internal projects, internal systems that definitely derive from Star Wars. And without naming names, I mean, I can tell you that myself, one of the biggest Star Wars nerds that's out there, and still have my collection of action figures. But again, that's not maybe the question you're asking.
Yeah, no, it's good. It's good. I'll take it. No. Anytime you involve somebody becoming a top 20 player in a board game like Blockus and mentioning Star Wars in the same frame, that's a successful nerd session. So I love it. Cool. Well, let's take a step away from the nerd, and I do want to get for our audience some thoughts on the blockchain crypto world right now. So Ben, I'll start with you, and would love to hear, particularly in the current market, and I'd love to you to take a perspective, because even though, as you say, it's only been a handful of years, right? 8-10 years of maturity in the market, if not more, and dog years of that. What is your financial strategy right now, and particularly in light of the swings in the capital markets and the volatility, to make sure that you guys are top of the game in your blockchain and crypto investments, and how you handle them? It's kind of a loaded question, and I know you could spend hours on this. So if you could distill it in some sort of framework for the audience, that would be terrific.
Yeah. So if the 10,000-foot view is, we view blockchain as a secular technological theme, similar to the internet, similar to cloud, similar to mobile, similar to AI, similar to quantum. This is, in our view, a technology that can be applied to many different parts of the economy. But if you kind of think about where blockchain technology is really having the biggest impact today, it's on financial services. So financial services is 11 to 12% of global GDP. Think about areas like payments, insurance, structured products, debt capital markets, the whole gamut of things that you can do from a financial standpoint. We call them kind of the ing verbs of finance, lending, borrowing, hedging, insuring, spending, all these things that you can do with money in the financial system today. Blockchain is really starting to have an impact. And what we've seen really over the past couple of years is that you've seen the biggest financial institutions in the world, whether it's BlackRock tokenizing treasuries, Fidelity launching their own stablecoin, Stripe acquiring 2 stablecoin companies for over $1 billion each. And the list goes on, is you've just seen this convergence between traditional finance and blockchain technology. In fact, it's like it would be rare today to find a large financial institution that's not actively using blockchain in their business. It's oftentimes not visible or tangible for the user, but it's happening. And so driving it back to our goal at ParaFi is really simple, candidly. We want to be the best investors in the world behind this new technology, this theme of blockchain technology. And there are many ways to invest behind it. You can invest in companies that are building infrastructure for blockchain technology. You can invest in the tokens themselves that are underpinning these new networks. You can invest in directional and non-directional strategies, equity and token, early stage and late stage. It really doesn't matter. The bottom line is we're investing in all parts of the blockchain ecosystem and everywhere that value accrues from this technology. And so that's really our goal. And that's why we set up the firm as a multi-strategy investment firm, because oftentimes institutions will come to us and say, how do we get exposure to this theme? And it's not always a one-size-fits-all approach. You actually really need to think more holistically about what your strategy is.
Yeah. I mean, that's super helpful. Just one quick follow-up with you. You mentioned the dog years, you mentioned the evolution. How has that strategy changed over the years, or has it not? Is it just continuing to execute? Has there been any tweaks to that strategy and what you're trying to do, what areas you want to conquer, or has it been fairly consistent from the start?
Yeah, I think there's kind of 2 ways to kind of answer the question. One is our investment approach, and 2 is the way we built the business. So from an investing approach, over the years, we've been very thoughtful about adding new strategies as the space has evolved. And so if you kind of think about building an investment firm is quite difficult. In fact, 90% of hedge funds fail within the first 3 years.
Yep.
It's actually, they have a lower survival rate than startups. And so what...
Audience, did you hear that? That is a true stat, and I've heard Ben say it before. So 90% of all hedge funds fail within, was it the first 3 years?
Yeah.
It's crazy. It's a crazy number. Sorry, Ben, I didn't mean to cut you off. It's riveting. Please go ahead.
No, it's crazy. And I mean, from the beginning, we thought to ourselves, in order to survive, not only do we have to make great investments, but we also have to build a great investment firm. And those 2 things are actually very different. A lot of people are great investors, but not great builders of an investment firm. And a lot of people are great builders of an investment firm, but not great investors. And candidly, that's one of the reasons why I love working with Adrian, because I think he's the best at what he does from a business building standpoint. But as we built ParaFi, we've aimed to be really thoughtful about building different products and strategies, growing our team in a really thoughtful way. And our approach has always been very long-term, focused on partnering with the right people, and not always speed, but just thoughtfulness. And I think it served us well, because over time, the number of other crypto funds in the space has ebbed and flowed, but we've kind of continued to compound and grow. So there's building the investment firm, and that's part of what we've done over time. And we've added new strategies, grown our team, continue to grow our existing strategies. And then there's the investing side of things. And look, just to take a moment of reflection, back in 2021, and even in 2017 during the ICO boom, I mean, I think the industry got candidly way out over its skis in terms of what it thought blockchain technology could do. And I think from the beginning, we've been very focused on where we think there'll be the most disruption from this technology, which is finance. That's why the firm's called ParaFi. It's short for Paradigm Shift in Finance. And by staying really focused around our thesis, which again has evolved, like we haven't gotten everything right, we've been just very zeroed in on areas that we think we know very well and areas that we have high conviction in. So that's led us to invest in Polymarket that, in 2020. It led us to investing in stablecoins long before they were a buzzword, or tokenization or DeFi. We've been investing behind these themes for the better part of a decade just because we've been super focused around this one area of the blockchain space. We're candidly focused around that theme. We sometimes, we look at other areas, but I think that focus is important because it's very grounding, because crypto tends to move in hype cycles and it can be distracting. And I think having your core thesis that you can always fall back on is critical as an investor.
And to the audience, Ben's being a little humble, but that core thesis has made ParaFi one of the most successful, I know it's early innings, but one of the most successful blockchain crypto investment firms out there. I won't disclose any percentages or statistics and see the stuff that's out there, but I do also happen to be a very small limited partner in some of the ParaFi funds, and the success has been absolutely unreal, particularly at a fund level, but just generally. So Ben, as an investor, thank you for that. But before we jump for Adrian, ParaFi's been on an incredible journey. I would love for you to tell me and the audience what's evolved the most since you joined. And it can either be about the firm itself, the market, but I'd love to hear top 3 things that you've seen change the most with ParaFi broadly since you joined the firm.
Yeah. I think it's been interesting over the past 8 years to see the industry in the way the industry has evolved, especially if you see then what our goal was from the beginning in building a firm. As we mentioned, it's really institutional focused. So there are key things that are important to any asset manager, regardless if it's digital assets or not, right? There are things like custody. There are things like valuation. There are things like making, reconciling investments, things that are really part of every fund, regardless of what they invest in. And one thing that was very interesting, to go through is, especially coming from Blackstone, where we underwrote the risk of firms that across multiple strategies, but a lot of them in established markets, being in a new asset class and going one from allocator to operator was combined with a new asset class was interesting because we knew what was important when it came to custody. What was the industry? Had they built all the pipes and plumbing back then 8 years ago? No, it just wasn't there yet. So there are different ways of approaching things like custody. The industry over the past years has really caught up in the way that custody, as one example has been approached. Before, the top question was, do you use a qualified custodian? How do you custody a qualified custodian? That's no longer as top of a question because the qualified custodians have come a long way, both from the traditional firms as well as the established firms that are here, as well as the partners that we have, right? Early on, we knew that we wanted the right partners as we navigated the asset class, Latham being a key one to us, where it was a new asset class for everybody.
Yeah, I'll pay you for that later. I really appreciate that. Very nice.
No, of course. But seriously, and if you look at our auditors, look at all that, these are things that are not in the traditional sense sexy and really forward-thinking out there, but they are the basic building blocks that are incredibly important for any asset manager, and be part of the journey of educating some of the top firms, partnering with the top firms as they themselves are navigating it. And basic things that I already mentioned was partly an obstacle, but was also what allows us to continue to evolve the firm. And I think right now, what's an interesting thing that we're saying is, just like Ben's mentioned on the investment side, this convergence of traditional assets and digital assets, we as a firm have to be able to invest, same things, custody, transact, value, all the full life of a trade, as we now have both traditional assets that are crypto linked as well as digital assets, all within one firm, and being able to make a decision to evolve ahead of it and then with it is incredibly important, where we have elements of both what we used to call a traditional asset management firm and more of a digital asset firm.
This is actually a perfect segue based on that to just the broad macro trends that we've been seeing in the market. So Adrian, I'll actually stick with you since you kind of touched on some of those things. What's been the most challenging aspect from an operator? Is it more the tech company specific issues like that you guys face like every other company, the operating company, or has it been the more blockchain crypto specific issues, or thirdly, the last one, which is probably where I'm leaning for the answer, but I would love for you to confirm or deny just the macro level challenges right now, the global politics, obviously. Yeah, would love your view on what's been the most challenging aspect, particularly in this market.
Yeah, I mean, I think not a competent answer, but it kind of has been all of the above. I mean, over the past few years, there's a lot that we've had to navigate, especially focused on technology that we are focused on, or the asset class that we are. There are things that can be very specific to its evolution, its development, but in a backdrop where there are these, large macro events, political events, both at the macro level, and then also as kind of the thing I've talked about, where this asset class itself is kind of in a stage where it's seen how can it formally be part of existing laws? How can it formally be part of the existing overall incumbents, overall structure? So you see that both in, the regulatory clarity that people have been pushing for and looking for. So you have that backdrop, then you have the macro backdrop, then you have the political backdrop. So it really compounds across this. But again, over the time of ParaFi, we've navigated a good amount of this. And I think it's part of a new asset class, part of the world, we live in today. And I think it's kind of where we've been really focused on navigating, and we kind of know that there'll be different versions of clarity, different things to navigate, even looking now. And I think, with this asset class when we're focused, you have to understand kind of what is truly new, what's a time when you have to recreate the wheel, or what's a time when, you don't need to, and you can kind of navigate with kind of the firm you built.
Yeah, I mean, Ben, I'm going to ask you a similar question because I actually think Adrian touched upon it. I'm wondering if you'll have a different response. What are the macro trends now that are really shaping the blockchain crypto world? I mean, it's been a super interesting environment. Obviously, the current Trump administration has pushed through some legislation that has been very favorable to the industry. At the same time, it seems like the macro and other headwinds have put pressure on the industry and the returns, particularly if you look at where Bitcoin prices are right now. It's not where you would think in light of the availability of capital and the framework that's been developed and opened up with the new legislation. So we'd love to hear why we're here and where those trends are going to take the blockchain crypto world in the future.
So yeah, I think you're absolutely right. There has been a massive decoupling between fundamental adoption and growth of blockchain technology and the actual prices of digital assets. And more so than at any point I can remember running ParaFi or investing in this space. If you just kind of look at the biggest macro trends and what's actually happening, one, stable coins are now, $300 billion plus, doing more settlement volume than Visa. They're basically dollarizing emerging market economies. The US government is starting to understand that stablecoins are actually a mechanism to drive dollar dominance globally.
Yep.
And you've heard this from Scott Bessent and the administration. You had the Genius Act that obviously passed last April. So, I mean, blockchains as a medium for moving dollars, i.e. stablecoins, is massive. I mean, this is growing and compounding, 50 to 100% year over year across most metrics. If you look at, unique senders of stable coins, transaction volume, supply outstanding, et cetera. And they're also this isn't a SaaS-apocalyptic kind of part of the economy. These are, when we're talking about moving money, this is very insulated. So stablecoins are have truly hit product market fit. You have tokenization where this is the idea of just tokenizing real world assets, whether it's real estate, private credit, treasuries. Larry Fink has said that tokenization is basically he views it as transformational as when we went from analog to electronic on the stock markets in the 70s and 80s. So tokenization is a major theme, and it's actually growing faster than stablecoins. So the idea here is basically you take an asset that may be memorialized in a legal agreement, which is a PDF agreement, right? Or it may be held on DTCC's ledger, and you move it on chain. So you now have better modality, atomic settlement, more transparency, et cetera. And that is a pretty big 0 to 1 unlock. And actually, candidly, like one of the really interesting things about ParaFi, by the way, is like a lot of what's being disrupted here are things we're consumers of. So like if we participate in a pipe, right, for a public company, I mean, just getting settlement of our shares into our brokerage account, I mean, it actually takes a lot of like back and middle office muscle to get that across the line.
Painful.
It's not very efficient. It's very painful. It involves like a lot of like legal and compliance work versus like taking settlement of a token on chain. Like this is, it's a lot more like kind of elegant and efficient. And so we're kind of in an interesting position because we're kind of investing in and dog fooding the exact technology that we use in our existing business on the traditional side, where we also, engage on chain and use tokens. So it's interesting to kind of straddle both worlds. But look, I'll kind of shortcut this answer, but it's like, look, it's stablecoins, it's tokenization. I mean, prediction markets are having a truly like genuine moment in like the zeitgeist on like social media and, as like a new disruptive way to understand the truth. You're seeing a lot with the convergence between crypto and AI, I think is like really, really fascinating. And I think crypto and AI are very closely intertwined in terms of actually, if you go to Silicon Valley and talk to people building in AI, oftentimes like they're more excited about crypto than the people building in crypto. And so, you're seeing a lot of interesting use cases around agentic finance. Or like,
why does that, Ben? I mean, for a lot of folks that don't have the history, a lot of obviously the GPU and all that kind of stuff came from folks who were in blockchain and crypto and getting the whole CoreWeave history being in the industry, and there's a few others like that, and how do you see AI take blockchain forward? Is it just going to be intensifying the speed at which the transactions on the blockchain occur, or is it going to be something much more fundamental and monumental than that?
Yeah, so there are like a few different areas of intersection. So yeah, there are definitely some of the Bitcoin miners and proof of stake validators that like basically took their existing like physical infrastructure and pivoted to servicing model training and inference. That's more of an area of, I would say, cannibalization than collaboration between AI and crypto. The areas that I'm most excited about is AI agents will need to be able to move value on the internet. And it's difficult to do that using kind of banking APIs or credit cards, especially if you want to move like 5 cents on the internet. Like it's not economic to use to use traditional rails. And so that's really where stablecoins come into play. So only humans, companies, and governments can open bank accounts. AI agents can't open bank accounts. And so having a 24/7 environment that's global, programmable, and kind of frictionless, and you can move very small quantities. In many ways, like blockchains are like purpose-built for agentic finance. And, there's kind of a growing consensus around this. If you think Stripe in their annual letter, the founders mentioned that most agentic finance will occur using stablecoins. And, you've seen Coinbase has the 402 protocol, which now is like the number of agents and volume on that network is kind of materially compounding. So stablecoins are very much, money for machines, money for AI. And I think that, the majority of usage on blockchains will not be human driven. It will likely be AI agents interacting with one another and or interacting with kind of financial institutions. It's like the other second big area. Look, AI is also being used to do things like audit smart contracts to make, using financial products on chain safer. Some people are experimenting around creating products that make inference more private. So your data is not living with Anthropic or OpenAI.
So it could actually live on the blockchain just for you.
Yes, exactly. Like everything you query is encrypted and it doesn't live on some company's servers. There are also people that are building more kind of like aggregators for inference. So you can ask a question and different AI models effectively bid on responding to that question. And the model with the lowest bid effectively is able to, so you're paying more a la carte for inference. Like there's a bunch of interesting experiments. There's also decentralized networks of GPUs. So people effectively aiming to train models by pooling their compute. So there are a lot of interesting areas of overlap, but I think the most obvious or most salient is just this idea of AI agents moving value using blockchains. And I think that alone is going to be pretty big.
One fundamental building block from there, as that continues to evolve and solve for other problems that lead from the use of that, you're going to just continue to see that evolve and expand over time.
I mean, the whole thought of the blockchain being purpose-built for agentic AI is something that, I think we'll be facing in the near term. It's just something that folks should double or triple click on top of all these mega trends that we have with stable coins, tokenization, which is just, from my simple-minded finance background, tokenization is just the higher level of the great asset monetization that we've been seeing occur through finance. It's the next level that takes it to the digital realm on the blockchain. And then obviously the prediction markets are all the rage now, and good, bad, or ugly. It's definitely a very new way, or I guess the old way in the new age of looking at information and sharing it and actually making decision making on it. And it's amazing that combo of all these things with AI could really be a crescendo moment for the blockchain. Before we jump into the last part, maybe this is a question for you, Ben or Adrian, because obviously the prices have decoupled, and we kind of mentioned it earlier. Why do you think that is? Is it just because of the more macro issues and going to certain asset classes like gold or others vis-a-vis Bitcoin or other blockchain assets? I think from a viewer looking outside and saying, hey, all these great things are trending. It's an unbelievable moment. It's built for it. You got now the rails on the legislation side that are really built through. So why are we seeing that this particular time at the blockchain, at least the price structures really get stressed?
The number one reason is that retail capital that was previously invested in tokens has completely pivoted out of the space to invest in AI stocks.
Got it.
That's the single biggest reason. So crypto is generally less volatile now than it's ever been. It's a bit less exciting to trade. A lot of attention has shifted to AI. A lot of attention has shifted to quantum. A lot of attention has shifted to defense stocks, to defense tech, robotics, other areas of the economy. And so you've seen retail, which historically has driven prior crypto bull markets, all that capital, not all of it, but a majority of it, based on the data we see, has really pivoted out of crypto capital markets. And what's interesting is the cross current is that a lot of institutional capital is coming into the crypto at a time when a lot of retail capital is leaving. On the ground floor, in terms of what we're seeing, we're talking to very large allocators, sovereign wealth funds, endowments, foundations, et cetera, who are allocating to this asset class and space today. But there's that cross current with retail leaving, institutional capital coming in. I think that is the single biggest driver. I think there are some other more flows driven structural kind of components to it. I think there's some concern around quantum computing and how that could affect Bitcoin and other digital assets. But in general, I think it's just cannibalizing attention and capital flows. And now, look, I think this all reverses. I mean, well, we're not underwriting this to reverse and for retail capital to come in. In general, our view is that a lot of these networks and companies are just growing and compounding revenue, earnings, users, et cetera. And more institutional capital is coming into these markets. And our sense is over time, that will be an important factor in kind of driving price. But our underwriting expectation is you don't really need retail capital to come back for this asset class to perform really well in the future. Of course, if it does, that's gravy. But, my sense is that crypto has always been very cyclical, and sometimes it moves in ways that are a bit counterintuitive. If you were to just look at all the facts on the field, all the regulation, all of the, the support from this administration, Genius Act, Clarity's coming soon, all the institutional involvement in the space, all the growth around stablecoins, tokenization, prediction markets, DeFi, and you weren't looking at prices, you would be shocked to see that things are where they are. At least that's my view.
100%.
So I think there's just been this decoupling or this divergence that doesn't really make sense. I think we'll look back on this moment as a moment where it's oh yeah, that didn't make sense. And of course, nature healed and like things kind of course corrected. But we've always kind of taken the long-term view, as you know, with our capital and our investments. Like yes, it is a little, can be a little distracting if like prices in the near term don't move as we underwrite them to move necessarily. But as you kind of zoom out, all the trends are very much intact. I mean, if anything, we're just more confident than ever and view this as like a great opportunity to deploy.
I mean, what's the famous? You're making me think of the famous quote that I think it's Warren Buffett, but maybe it's someone else that, in the short term, the markets are a voting machine. In the long term, they're a measuring machine.
Right.
Or something of that nature. And
yeah, exactly.
It sounds like that's going to be where this in this market's no different. So that's amazing. We're going to jump into the last part of our podcast. It's what I call the speed poker round. Now, Ben, we didn't mention it, but the audience should know that you were a competitive chess player. So I know making you switch from chess to poker, but as you know, I prefer the more stochastic poker game with all the things that come with it than the more deterministic chess game. So if you'll entertain me, I'm going to ask you guys 2 or 3 questions. I would love a crisp response, not, vacillating back and forth, no hedging. And I'll ask it of each of you guys. And I'll start with Adrian. I'll start with you. What's the biggest professional obstacle you faced?
That transition from allocator to operator in a new asset class.
Okay. Why is that? What was so difficult at that point? It was just like a different skill set, or different pressures, or?
Yeah, I mean, in the end, it ended up being an incredible strength, but it's one thing to underwrite risk, measure risk, and it's another one to operate within risk. And combining both, has been incredibly valuable for me. The initial transition from anyone who goes from underwriting to operating, it can be a steep curve.
Got it. Okay. And Ben, how about you? What's the biggest professional obstacle you faced?
Look, I think the crypto bear markets of 2018 and 2022 were pretty challenging. Obviously, like we emerged from them stronger than ever, and like we learned a lot. But it wouldn't be honest to say that they were easy. So those were probably 2 of the periods where, I learned a lot and were professional obstacles.
Very, very cool. I mean, look, I'm just happy that neither of you guys said the biggest professional obstacle was working with me. So I'll take that as a win of both of those. Next question. Ideal teammate. You got to pick one. What do you value most? Education, experience, or temperament? Ben, I'll start with you on this one.
Oof. I would say temperament. I actually think that's probably the, of those 3, I would say that's probably like the easiest choice for me. Just because, look, like you can have like the smartest person, the most pedigreed academic person with, decades of experience. But if their temperament isn't good, like it's just like miserable to work with them. And so I kind of view business as like, it's kind of war, right? It's like a competitive arena. You're in the trenches with people, and like you want to really feel good about the people you work with. Like life's short. So I'm going with temperament.
Adrian?
Same. I think experience, education, all that can be manifested in how it reflects in their temperament. And, we focus here on how you do anything is how you do everything. And I think the approach to challenging difficult problems, you need to I think temperament.
Yeah. I'm just upset as someone whose parents spent so much money on education. No one says education. It's pretty consistent, which is by the way, consistent. And everybody should remember that, because it's never ends or starts with education. It's part of who you are that feeds into your experiences. And most importantly, which I think is consistent with your guys' response, temperament is the way that you reflect all of your education, all of your experience in a way that actually makes a practical difference rather than just lighting that stuff on fire. So,
well, Haim, we like to refer to you as the triple threat because you have all 3: education, experience, and temperament.
Yeah, no, I may actually, for this podcast, we may actually lead with that, the triple threat. I love that. I haven't been called that for a very long time, so I appreciate that. That's the kindest thing anyone's ever called me, Ben. So next question is my favorite. It's the poker table question. So you guys imagine that at ParaFi today, you get to change just one thing only. Is it the game itself, i.e. the broader economy? Is it the table, i.e. the crypto blockchain industry? Is it the house, which is the regulatory regime and government? Is it the stack of chips, i.e. how much cash you have and how you can pay for it? Or is it the other players in the industry? Are folks not playing fair or nice? They're not coordinated enough. They're sticking into each other. Adrian, I'll start with you on this one. Which single thing, and I'm not going to let you pick more than one, which single thing do you change or adjust?
I feel like to navigate all of these, but I answer one. It's always great when you have additional clarity in how to play the game, how to navigate the game. So I would go with house. Not like a change, but any improvement to that clarity, improvement to that, is always helpful as you continue to navigate something new.
Ben?
I would say the stack of chips. I don't always mind the lack of clarity just because it can kind of create alpha. And when there is too much clarity and conditions are smooth sailing, there's more competition. So yeah, I think more chips is great, but I would say more chips.
More chips. All right. Well, look, Biggie wasn't right. More money, more problems is not necessarily the right way to go, right? The cash is king and you need more of it. It really does help for sure. So speaking of, you guys are talking about money. It's almost noontime here in California where I'm at. I'm hungry. What's your favorite food to eat at work and while playing poker, or Ben, for you, while playing chess? I'm fine to give you what food you eat in the more distinguished chess game.
Oh yeah, I'm going to go with, so I have two answers to this. I know I should only choose one, but I can't help but go with two. So the first is the chocolate matzah that Latham sent to our office. Happy Passover to those who celebrate.
Happy Passover. Chag Sameach, everybody.
Chag Sameach. The second is I love a good Weisenson's, everything bagel with whitefish salad, or maybe scallion cream cheese with some smoked salmon on top. So shout out to Haim on.
All right, you're really trying to butter me up. I'm going to make sure to deliver that stuff for you. Hopefully, the audience knows that White & Sons is a Latham Watkins client. I'm an early investor and very involved. And Ben has been a lover of all their food options. So I'll continue to make sure those come their way. Very, very good answers. I like those. Adrian, your end.
Wow. Well, I'm going to go with the most boring answer, but something I absolutely love, which is unroasted, unsalted, raw cashews. And I can eat this by the pound. And that's one of them. And then the second one.
Is that because that's the best thing you can buy at Dodger Stadium?
No answer. And then the other, it's only answer one, but the other is beef jerky, which one specific place that Ben can get it from, it's honestly the best. It's almost like an actual steak that was turned into beef jerky. It's the best beef jerky in the absolute world.
Wow. Well, I know what I'm going to ask you guys in exchange for some Wise Sons in the future. All right. Very nice. I'll take it. So you guys, it's been an absolute pleasure, Adrian and Ben, to have you guys on. Really appreciate, obviously, your time today on this podcast, you working with me and our Latham Watkins team for all these years. It's truly been a pleasure. So yeah, thank you very much, guys. Really appreciate it.
I appreciate it. Thanks, Haim.
Yeah, thanks a lot, Haim.
That was my interview with Ben and Adrian from ParaFi Capital. Thanks again to both for being here. Thank you for checking out this episode of Connected with Latham. You can subscribe and listen to new and archived episodes of Latham's podcasts on lw.com, Apple Podcasts, Spotify, or anywhere else you listen to podcasts. If you have questions or would like additional information, please email us using the links located in the show description. We hope you'll join us again next time.
This podcast is provided as a service of Latham & Watkins, LLP. Listening to this podcast does not create an attorney-client relationship between you and Latham & Watkins, LLP, and you should not send confidential information to Latham & Watkins, LLP. While we make every effort to assure that the content of this podcast is accurate, comprehensive, and current, we do not warrant or guarantee any of those things. And you may not rely on this podcast as a substitute for legal research and/or consulting a qualified attorney. Listening to this podcast is not a substitute for engaging a lawyer to advise you on your individual needs. Should you require legal advice on the issues covered in this podcast, please consult a qualified attorney. Under New York's Code of Professional Responsibility, portions of this communication contain attorney advertising. Prior results do not guarantee a similar outcome. Results depend upon a variety of factors unique to each representation. Please direct all inquiries regarding the conduct of Latham & Watkins attorneys under the New York's disciplinary rules to Latham & Watkins, LLP, 1271 Avenue of the Americas, New York, New York, 10020. Phone number 1-212-906-1200.